Now, the Awesome Oscillator's name might sound a bit cheesy, but I can tell you it's a very legitimate technical analysis indicator tool. And in front of you, you can see the version that I like to use down at the bottom as a line sort of indicator. It can come in forms of histograms. That we're going to put it to pieces in this video and give you all the different options and show you how it works and build in a few strategy ideas as well. But first of all, let's find out what exactly it is. So the Awesome Oscillator was created by a guy called Bill Williams, and it's used as an indicator to measure market momentum. Now, you will find and see that it is very similar to the MACD indicator, and the AO, we're going to abbreviate it to that, calculates the difference of a 34 period and 5 period simple moving averages. Now, those simple moving averages that I used are not calculated using closing prices, but rather each bar's midpoint. So slightly different there to the MACD in its approach, but essentially, as you can see by those inputs, very similar. Now, the AO is generally used to affirm trends or to anticipate possible reversals, but I like to use it also as an indicator into getting into trades in different time frames, giving me that entry and exit that I'm looking for. And it comes in very many different formats, as we're going to see, and I have a particular favorite which I'll also show you how to set up. So let's get into a bit of maths before moving on. The calculation of the AO indicator, very simple, as you can see there. Length AO1 equals input 5 min val equals 1 divided by those 5 periods, and very similar for AO2, just 34 used as the period. And the actual calculation of the AO using simple moving averages, the high and the lows divided by 2 to get that mid price as we talked about, and the length, which comes from those two variable parts above, AO1 and AO2, minus again the simple moving average, the high lows into the midpoint, and length AO2. So all very simple stuff. So what's it supposed to do, and what are the basic trading rules? Well, it's an oscillator designed to have values that fluctuate above and below the zero line, like our MACD. The generated values are normally plotted on a histogram. Like I said, you saw my line version, we'll look at that in a minute. A bar is green when its value is higher than the previous bar, i.e. bullish, and a red bar indicates that a bar is lower than the previous bar. So when the AO's value are above the zero line, this indicates that the short-term period is trending higher than the long-term period, i.e. we are bullish, and vice versa. When the AO's values below the zero line, the short-term period is trending lower than the longer-term period, and therefore bearish. So obviously it's all very good for us for creating trading signals. So let's now take a look how it looks on the charts and how we would set it up. So I'm using TradingView for my chart example here, and it's probably going to be very similar across a lot of the different packages out there available. Now in front of you, you can see a daily chart for the S&P 500 E-mini futures, just a bog standard Heikin Ashi setup, and we're going to find out how we can add on the oscillator. And we go to indicators up the top, we type in awesome, and you can see instantly it comes up. It's under my favorites because it's one I use all the time, but there you can see under the technicals, give it a click and it is added nicely. Now remember, I said this is the histogram version to start with, and it comes at those default settings, and if we right click onto the settings, we can see that you can actually change it by different time frames on the versus the chart you're looking at above, but we want to tidy it up a little bit to go more to the way that I like to use it, and what I'm going to pad out in the rest of this video. Now as you can see, there is the histogram set to histogram, and before I do press any more buttons, a lot of people do like the use of just that as the strategy that histogram, crossing that zero line, changing from green to red, all very straightforward. But I like to use it, visually as a line chart. So we cross there. I'm going to make those lines a bit thicker. There we go. Let's make that green a bit brighter. There we go. So that is the awesome oscillator, and as you can see from here, we got that zero line sort of zone going through the middle. That's the important cross. But notice how the reds change to the greens. That's our bearish to bullish, and vice versa. And then just very quickly, look how that marries up to the price above and the change in that price. All very nice indeed. It makes it very clear just using this sort of line setup what's going to happen to the price next. And we're going to look at a few trading rules and examples coming up. Sticking with our S&P daily setup, flipped it now to a line break chart, and you can see it works equally as well. And then you could create rules around that as well. So it's not just limited to standard bar, candlestick or Heikin-Ashi charts. You can use it across different chart types. And here again on a Renko chart, look how smooth the Renko chart makes the price data anyway, and then you've got the awesome oscillator below that, clearly signifying the turns in the price. So sticking with the Renko chart, all I've added on here is a stochastic indicator. Now you can see the inputs there. If I go to the settings, we have the percentage K, percentage D, white and red. I'm going to turn off the percentage D, and I'm going to marry that in for this strategy idea to the awesome oscillator above. Now different inputs, this one's more about volatility. Like we said, this is about the mid price. So what are we looking for here? Well, for example, if the stochastic comes on up through the 20 point and the awesome oscillator is green, then we buy into the index here. And where do we get out? Well, we wait until that stochastic closes out down through the 80 mark, and as you can see, that's not bad timing. Also, you can see the change in the awesome oscillator, and it's the same process for long and short trades. You might want to add in like a moving average to rule out maybe false short trades. In this example, if say that was the moving average, maybe a 200 moving average, to refine the strategy further. But it's the same case, vice versa, going up and down through there, and you can see you can pick up some really nice points as those rules play out. So a really simple strategy there for you to think about. And just another idea using Heikin-Ashi charts, throwing on a few other indicators here. But what you can see is we can use it as a longer term trend filter. I'm now in Euro Japanese Yen 15-minute chart, and all I've done here is I've gone to the settings and put the inputs to 1 hour. So it's a 15-minute chart here, and for the oscillator originally, and then I've added this another one that gives us a longer term trend filter, because remember, the higher the trend, the more powerful impact it has on the lesser trends. And it also takes out these, like I say, you can see these, I call them false blips in the awesome oscillator. So what we would say is, because that trend is down, we'd be looking for down trades only in the setup above. And how could we do that? Well, you could think about maybe using like this longer term moving average. So if it's above it, it's bullish, below bearish. And if we just hide that for the moment, got another idea for you here. This is Bollinger Bands, and I've set them to go into the settings 10-1-5 and use it as a breakout. If, for example, in our situation here, we had the price close under the bands and it was all lining up red for us in the two awesome oscillators, then we would take the trade. And maybe to get out of the trade, you would just take a maybe 1.5% move maybe as your potential target risk in sort of maybe the stop area at the top end of that Bollinger Band, or you could trail it down as it goes down the band and wait till it comes back in. Maybe that could be your closeout there, or maybe there, and it's the same sort of process to the setup. Or you could just use the Ichimoku cloud as your trend filter. If it's above it, it's bullish, below it, bearish, and again when that price breaks out, what's going on with the setup below? Are both of these red, in here? Then we trade, and maybe the stop just above the cloud, or a predefined turn, previous high, and we can trail it on down or take a fixed percentage like we saw previously. So there's some trading ideas for you to play around with. It's a really good tool, the Awesome Oscillator, especially when I think you flip it to the line view, because you can clearly see turns and trends, changes in those trends very clearly. So I hope you can now see how awesome the Awesome Oscillator could be in your trading and investing. Works in different time frames, different markets. You can see how good it is in the different chart types like Renko, line break, and especially when you add in other indicators to really strengthen up your trading strategy. Now, if you're new to technical analysis and trading, got a lot of great playlists on our channel for you to follow, but if you're really new to technical analysis, then I have a great video for you to watch right now.